markets.
Good morning, everybody. It's the 24th of February. We're Signal Centre Talking Bull. I'm Joe Neighbour, joined by Ian Coleman and the birthday boy, Steve O'Hare.
Hey!
You
don't look your age,
lad?
Stevie.
I know.
He hasn't told you how old he is.
No.
I know how old he is.
Yeah, he knows.
He's 35.
Yeah, exactly. I've got that
I've got a copy of his passport
numbers.
here.
You both all right?
Yeah, not bad.
Not bad.
Excellent. Good. See the news overnight about Tiger Woods?
Yeah. Was he pissed or not?
Does it? I haven't seen anything to suggest he was, but he has suffered with drink problems, hasn't he, in the past, or antidepressants
driving
or something?
problems. Yeah. He can't drive for toffee.
But they're operating on his legs, though, aren't they? Which doesn't sound very good.
Yeah, it sounds like he's got a pretty severe break on one of his legs, tibia and fibia. So he will not be playing golf for a while, I would have thought, or if ever again, maybe.
Well, he hasn't played golf for a while anyway, has he?
Well, he won the Masters, didn't he?
When?
A couple of years ago.
Probably about 100 years ago.
He's been coming back quite well, I thought. Yeah.
Yeah. Anyway, back to markets. So yesterday we saw a bit of risk off across the board. That seemed to have been paired a little bit on the back of Jerome Powell's chat last night, and he was basically saying that he brushed off any yield or inflation concerns. So that
no interest rate hikes then.
Not for now, no. So they're going to let inflation run wild, it would seem, for now.
It's what we were saying yesterday, wasn't it? We were sort of talking about inflation looks like it's spiking higher, but compared to prices last year, is it really that much of an issue? I know there's a lot of pressure on wages and stuff, but raising interest rates would be the biggest mistake they've ever made, I think.
At the moment, it would definitely. I mean, I don't know how you can really. Too many people borrowed up to their eyeballs, I would have thought.
Yeah. Wait till we push it a little bit further and then they'll hit us with it.
Yeah, exactly. So we've seen a bit of rotation out of certain areas of stocks, particularly sort of the high flying sectors like tech and clean energy. And we've seen a sort of shift to more stocks involved in the economy's reopening. So we've seen a bit of froth come off the likes of Tesla and Bitcoin over the last
12% up today.
Bitcoin.
Oh no, that's Theta.
Oh, I got 3% up today.
No, they keep on going on about Theta, but I thought Tesla stocks was really interesting. Have you seen that? Because obviously, second largest institutional investor in Bitcoin, their stocks are off 30%.
Since then.
Since the Bitcoin drop, it's followed it basically lower.
Savage.
Yeah.
We've seen a rise in stock trading stamp duty in China, so that's encouraged a little bit of selling. That's maybe explaining why we've seen a 2.5% dip in the CSI 300. So yeah, fair bit going on. What's the charts looking like, gents? Either of you want to have a look through? Steve, you need to show your screen.
Oh yeah.
You might go
in which case, I'll hand it over to Ian.
All right, mate.
No, you snooze, you lose, is it?
Snooze, you lose, mate. Daily chart just highlights dollar index that we're going nowhere. Very boring day for the dollar index. I think basically the market was waiting for Powell, and then Powell was a bit boring, really. So we're still in the middle of this, aren't we? Which is again just a little bit boring. We said if we broke this, let me just show you that chart. We said if we clearly broke that reverse trend line resistance, then the dip had probably been completed and we were going to continue, and all it did was kept on spiking up to there, and we're just consolidating down around there. We have got a little bit of downward pressure this morning. What I'd like to see is a move down towards this level, which we've been going on about 89.72, to then look for buying interest or opportunities, I should say, to take the dollar index higher. And obviously, if the dollar index starts going higher, that should mean risk off, and we haven't got risk off at the moment. We've got risk on, I believe, at the moment. So reflecting that back onto the majors, and it definitely feels very groundhoggy day at the moment. We're just consolidating around this previous swing high. I think we we are going to break there. We've got sort of a bullish outside candle with a count on the 1 hour chart. I'll then focus on this sort of level, or anywhere between this sort of area, 122.30, 122.65 for a possible top, but keeping an eye on the dollar index for an indication. Cables, quite interesting. It really just, it's like there's no stopping it, but euro sterling, using correlation, euro sterling has hit a very decent level overnight and spiked down to what we were talking about as being support. So this could be a topping pattern. It's not a very common fib, but on the daily chart we've got a 224 extension here. It does make up a lot of symmetrical patterns, but that would mean that that leg there would have to project 161.8%, and it doesn't. So it doesn't make a clear symmetrical pattern. But what we do have is a 224 there. We also, on the 4 hour chart, we've also got a 361.8% extension level here. So I think, again, with the dollar index, you want to be keeping an eye on the dollar index. It could quite easily spike above this. I think if you want to play sterling shorts, there's better crosses to look at, i.e. euro sterling, and we'll get onto that in a minute. Dollar Swiss and the Swiss crosses of the move higher has been,
and the yen
dramatic. Yeah. I think we're in this formation, A, B, C, D, up to the upside. 91.58 is the target level for that. 91.90 is the previous swing high. We did just dip down. If you look at this 8 hour chart, we just dipped down to retest that breakout level this morning. So this is looking pretty positive. Dollar yen, again, as Joe was saying, just pushing to the upside. It's risk on again. I can't see any indication that it's not. I think we're going to focus on this confluence area here, which is 106.48, 106.60. So bullish on this, but then I would be, it's not really a wedge yet, is it? But I would be careful for divergence and what have you up around these levels. Dollar CAD, we need to look at remember we bounced off here yesterday morning, said there was a potential for a double bottom, but we've clearly broken that, and we've got two fib levels to the downside. So this is still looking negative for the dollar and positive for oil. 125.21 is a daily fib, and if we go to this weekly, we've got a 124.92, so not far off, and probably will show some divergence as well when we get down towards these levels, but at the moment still looking quite bearish. Aussie dollar, and again, I can't really see many reasons to stop this rally. We have got a 261.8% extension here at 79.03. We have pushed through it. We have got a doji style candle. We said yesterday we really needed to get a close below here, which is 78.55, to indicate a topping pattern. At the moment we haven't got them. Even the 4 hour chart, I don't believe is really looking like a topping pattern. Maybe a head and shoulders, wait to see if we get a head and shoulders breakout. So sort of support here, resistance here, but it's a long way from forming yet. Euro sterling. So this is the one that we were talking about a confluence area. 85.60 is a 261.8% extension level on the 8 hour chart, and on the daily chart we got a 78.6% here, which is common for an ABCD correction, and it's not far off being pit perfect, that dip buying overnight. Anybody interested in sterling Swiss? Sterling Swiss is -1 correlated to euro sterling, so if euro sterling goes up, sterling Swiss should come down. Again, I think we're just going to reach this level here. This is the 61.8% fib retracement at 128.67 on euro yen, and if we go to this pattern here, really impulsive move to the upside actually this morning. 128.76, 128.81 would form a bearish butterfly formation, but again I'd look for topping patterns, because we still look like we've got yen weakness, as Joe was saying, with stocks moving to the upside, and I still think euro dollar's got move. Sorry, the euro's got scope to move to the upside, especially when you're looking at crosses. So even though it's a confluence area, I would look for a decent reversal formation, candle formation up there.
Cool.
Me done.
Thanks, Ian. Steve, what are you seeing on the indices and metals today, and commodities in general?
Well, oil has had a little bit of a turnaround. We'll have a little bit of a brief look at that. Obviously, with the weekly chart, we've talked about this, the downward trending resistance line, and we're testing that quite ferociously this week. But again, looks like a bit of rejection from the 78.6% retracement, just above 62.50 on the WTI crude oil. We've had basically oil prices fell. Industry data showed US crude inventories unexpectedly rose last week as the deep freeze in the southern states curbed demand from refineries that were forced to shut. So although we had them forced closures, the demand also went down because people stayed at home. So it's sort of like that news filtering through, saw a bit of a reversal in oil fortunes. I think it's only temporary. We've still got this bearish momentum that is turning positive, bit of a crossover in the MACD. So I still think I think this may be a buying opportunity in oil. So the setback is a potential opportunity. In gold, we're still seeing it. This gold slightly supported. The weaker dollar, obviously dollar index trading around the 90 level. I think that's quite a crucial level, really. It has to hold here. If it doesn't hold here, we could see another uplift in gold. We've got this type of morning-ish doji star sort of double formation. You've got the doji, you've got the bullish hammer, and you've got this weakness. So plenty of reasons to be sort of like pleased with the shiny yellow stuff at the moment. So I'll be looking to buy dips for a retest of the sort of previous resistance levels around about 1850, a little bit of a swing high and a psychological level, and the 1875 obviously is the key one to look for, which I think we got 1825 in the way of that. So potential upside. Silver's continuing to grind higher as well. That silent move higher in silver. It's not going unnoticed by the no hair. So copper, call a copper on this one. This daddy boy. Actually, I'll show you the futures chart here, which has got a lot more price information in it. Obviously, we talked about this for a long while now. So the Feb March high back in 2011 is 465, and obviously breaking the 332 level, which we talked about, formed this double bottom formation. Projected move higher is a move just above the previous swing high, so 475 we're targeting in copper. No slowing that bad boy down. Across the indices, with it's a little bit mixed, the indices. We've sort of like Joe mentioned, you've got China. We'll have a little look at China. China has struggled. Look at that. Sort of like a real sort of, I don't know what sort of sell-off that looks like. It's a sell-off. Are you sure? Sell-off. Are you sure? Sell-off. Are we sure? Not sure.
Morning, Tracy.
We'll. Good morning.
Good morning, Tracy. It's my birthday.
It's Steve's birthday.
Oh, happy birthday, Steve.
I don't know what he's expecting to get from you, but
I don't know what I was expecting.
Sort of like, way!
A virtual kiss, just to make Ian jealous. Aussie 200.
I don't get that on my birthday, so
maybe virtually you do. Obviously the commodities sort of looking perkier, so Aussie 200 is still sort of maintaining the push higher. Let's have a look at the Dow. Obviously these ending wedge formations on the daily charts, we still are monitoring those, but all the dips look to be bought currently. So as the guys were saying, there's no real sign of this slowing down. The grind higher continues, so we're looking for buying opportunities. In the European sector, I think the DAX for me is the one as well to watch. Europe under a bit of pressure, but we've got a long way to go before this turns negative. Potential double top, or are we just consolidating before the next push higher? Again, this wedge looks incredibly risky. Crypto, I'll have a little look at crypto. Crypto, I think I blew out on the gun to the head, which I sort of firmly expected yesterday, unfortunately. I'm a bit more positive about it this morning just because of the reaction. So we've had 2 pretty bearish days and reaction higher from the 45,000 level. And we've had a turnover in the MACD, so that's slightly negative. I saw another big company buying £1.5 million worth of
somebody's
cryptocurrency.
there's a fund or something that's tipped it yesterday. That was one of the reasons it's gone back up.
Yeah. And here we've had this head and shoulders formation that we've picked out, which is a bit wonky, so I wouldn't sort of trust it too much. But we've also got this triple bottom type formation. This is only on the hourly chart. And a bit of a flag formation potentially here. So yeah, really nice candle here, this hourly chart at 8 o'clock yesterday. That is a bullish outside candle, and that has led to a recovery back above the 49,700. So I think 50,000 at the moment is pivotal. Once we break above maybe the 50, this high here, 51,500, and break above this cloud, I think it opens up another attack to the upside. So although we had a bit of a setback yesterday and the day before in cryptos, looks like it's coming back with a vengeance today. Might be a hint for my talking bull.
Okay. Well, moving on to the talking bull then. So yesterday we had our 3 trades as usual. I went short the FTSE, which was 11 ticks offside at 9 o'clock, 0.16R. Steve, you were stopped on Bitcoin, as you mentioned. And Ian, you had a small loss on gold of 0.32R when you were buying that yesterday. So not much to say about that. Ian, you actually gone back in the lead on that.
Yay!
For the time being. Not very nice for Steve on his birthday, is it? He's going to have a humdinger today, I reckon.
This is the birthday trade, boys.
Yeah. Pay attention, everyone. Steve
you've got no
has
chance.
got a birthday trade. You ready to go then, Steve?
Yeah, I'm ready, yeah.
Go on then.
Right. Bought this morning myself, so a little bit higher than this.
On what platform did you do that?
Markets.com.
Oh.
Little plug there. Nice one. 58,000.
Long term?
No, I reckon it'll take about 2 hours. It'll be there before the candles are blown
out. New all-time highs.
Yes. In fact, I'll tell you what I'm going to do. I'll be sensible. Sensible on my birthday. Who's sensible at 53 years old? Whoops. There it is. Let's bring the stop in a bit tighter. 49,750. How's that look? Yes, 9.4 to 1. That'll do, donkey. My actual stop in this is 46,000, but for my gun to head challenge, I'm looking for a big humdinger of a 9.4 return. So getting along here at 50,542.35, targeting 58,000, stop at 49,750.
Best of luck.
We'll need it.
Ian, have you got one?
Yeah, I'm having a go at Euro Sterling for all the reasons that I said earlier. So it's hit all those confluence areas. I must little caveat here. This is the monthly chart. If this plays out, then Euro is foot all the way down to there, where we'll all be buying properties in Spain. If we're allowed to go over there at that point. So I'm buying Euro Sterling. I've just put a little line there because there is some resistance at 86.21, but I'm looking for a move back up to this level. And I've even got a little dip to get into. I think that'll do actually. 85.80. Targeting 86.76 with a stop at 85.52 gives me 3.4R.
R. Okay, good luck. I can't make my mind up. Okay, I'm just going to keep plugging the FTSE, I think, just because I kind of think there's maybe a head and shoulders building, but ultimately stocks are pretty bullish. Why's that moved? Yeah, potentially a head and shoulders forming here. We talked about this yesterday as my gun to the head trade. The measured move, if it breaks this neckline at 63.04, is down at 56.48. Highly speculative, obviously, at this point because it hasn't broken the neckline and it's not a head and shoulders, and it won't be a head and shoulders until it does. So for now, it's just in a bit of a bearish channel in the very short term. I'm going to sell it here at 65.85. Stop loss at 66.81. Targeting a move down to 56.50, which is 9.85R. Yeah, something dramatic would have to happen for that to happen, but you never know. Let's wait and see.
Nice.
Okay, so there's our 3 trades. In terms of news today and what could potentially get those things moving, we've got the Monetary Policy Committee hearing in the UK. We've also got another day of testimony from Jerome Powell today, so there'll be further commentary from him. In terms of data, we have US new home sales at 3 p.m. and at 3:30 we have US EIA crude oil inventories. So if you've got any oil exposure, keep an eye out for that. Anything else you've seen, Ian?
No. 3:30. Did you mention that Bank of England monetary policy report hearing?
Yeah, I mentioned the hearing. I didn't mention a time, so
yeah,
that's great.
3:30.
Cool.
And then Fed's Clarida is speaking twice today, 6 o'clock and 9 o'clock. Nothing really overnight.
Okey-doke.
I got a dentist that I'm going to that new Chinese dentist at 2:30.
Yeah. Have you got any plans for your birthday, Steve?
No.
No.
And if I did, wouldn't share them live. I wouldn't share them live on Talking Bill in case the government are watching.
Oh, they're always watching, mate. Don't worry about that. All right. Okay, right. Let's wrap it up there then, gents. Steve, have a wonderful day. And
enjoy.
You too, Ian, obviously. And
not as good as Steve.
Not as good as Steve, so we'll be back tomorrow morning.
All right.
Cheers.
Enjoy.
Cheers, guys. Bye.
Bye.
Yes.